Hi, hello, good evening, friends. Welcome back to the 16th session of the Super 25 program, India's largest online stock traders conference. So, well, friends, the speaker of today was supposed to be Mr. Gunjan Dua. Because of some emergencies, because of quarantine issues, he is unable to join us today. Nevertheless, we have another interesting speaker. He is colleague to Gunjan, probably senior to Gunjan, if you ask me. So we have Sahil Vijay on the call. He also comes from the same gang. His topic of today's presentation is application of neo wave theory and Fibonacci analysis in financial markets. So Sahil, thank you so much for being with us today, and you have taken up the pain to represent Gunjan during this crisis and with a very short notice. That is highly commendable. On behalf of the entire Super 25 team and the extended Traders Gurukul community, I extend my warm welcome and greetings to you into the Super 25 program.
Thanks a lot. Thanks a lot. Thanks a lot to Trading Gurukul. Thanks a lot to all of the guys, ladies and gentlemen, for being here to listen to me. Hopefully, I do justice to the opportunity and to the time you all are putting in. Just to start with, I would like to start from the very concept of it, Gurukul. So, starting on the very topic, before moving on to the topic, I would like to say thanks. I would like to convey my thanks to Gurukul, basically the forum which is going to help us grow together in this very interaction and in this very scenario and this very market where we are looking at. We all are students, and the mother market is the guru. The final guru is the markets, and whichever theory, whichever approach, whichever mechanism, whichever tool or technique we follow, at the end of the day, it's all try to find a price discovery mechanism. Whether we are doing algos or some traditional fundamental analysis or some traditional technical analysis on some recent developments in various categories, all these things are for the purpose of price discovery so that we can be along the trend, and at important junctures, at important change of trends, whether up or down, we should be aligning ourselves with the market, not against the market, so that we should be in a position to safeguard as well as earn from the markets. Now, moving on to the topic, application of new wave theory and Fibonacci analysis in financial markets. Before starting on anything, I must say this is why this very topic and why you are going to spend your 2 hours today and might be many more hours afterwards once you get interested into it. Uh, Myself, I think that the justification is enough. I am a student of markets, and as many of you and many others like me, the very puzzles and quick squiggles of market brought me to various laws, theories, applications, which was the one which ignited the most in me was Elliott wave theory. I started learning it, I started applying it, then got some, you can say, whack from the wax, not whack, wax from the market. So had to take my humble pie several times. But the quest was, I'm not going to quit. I have to improve myself, and this is the place where I have to make my living. And that brought me to the one theory, new wave theory. So before taking further, I just say why. Just like any other human expression, the markets also keep on evolving. We all keep evolving, we all keep developing. Sometimes we get simpler, sometimes we get complicated, but we keep on evolving. Neo wave theory is nothing. It is but just the evolution of Elliott wave theory. It is developed by Mr. Glenn Neely. I call him Sir Glenn Neely. And the quest to solve all those squiggles and solve to get the answers for all the puzzles which market threw upon me, I luckily got the opportunity to learn from him directly as well. So, before starting the topic, I would like to pay my humble obeisances and respects to all the gurus and from whom I have learned, who have been influential in teaching, whether it is the analysis skill or the trading skill, and most importantly, the mother markets, who have pushed me hard, enjoy, learn, fall, then get up, improve, run again. So this is the start of it. So the topic is application of new wave theory and Fibonacci analysis. Basically, these are not two different things. These are part and parcel of one another. Obviously, we will use it. Fibonacci analysis, we are going to use it as a independent tool as well. But believe me, Fibonacci analysis is nothing. It is just an expression or expansion of new wave theory. It gives, or Elliott wave theory, it just gives us the mathematical numerical numbers. So now moving on, these are all just disclaimers. Now application of neo wave theory and Fibonacci analysis. We are basically trying to find out a way of price discovery mechanism through technical analysis. Technical analysis is nothing. It just believes it is on the primarily on the four pillars that price discounts everything, price moves in trends, and it's not random, and trends are ineffective till it is reversed. So we are not talking about random walk theory or anything other. Prices are moving always, they are in trends, and the trend continues till it is reversed. Then history repeats itself because there are so many patterns, there are so many occurrences which happen over and over again and again in the historical perspective. And by looking back at the historical price movements, the structures, the price patterns, we come to know what is the likelihood of in the future of the market space. And it is the graphic representation of mass psychology, nothing else. It is a technical analysis. Now the objective is how we are going to project the mass psychology on a graph. Obviously, when we have a picture of something, when we have a pic of something, the clarity gets that much more. So technical analysis is nothing. We are just getting the graphic representation of mass psychology. So mass psychology means all the emotions of fear, greed, expectations of all the people, all the participants in various capacities in the market is depicted in the chart itself. Now, how to identify a trend? One of the very interesting basic questions which I found to be very, very important, very, very crucial. I just will take you to a chart and show you how, at a glance, at just one glance, we should be in a position to know whether the trend is up or down, just on one glance. When we go to a chart, we come to that. Then the neo wave theory, we will discuss about it. Then time and price projections. Basically, the rule of similarity and balance is the defining edge of neo wave theory. Neo wave theory puts so much of objectivity into picture that nothing else but it in itself is a self-defining and self-confirming space. It takes us to a level where the post pattern behavior of the market automatically justifies or tests whether my analysis is right or wrong. I don't have to have two, three, four, five, six counts. Obviously, there are times when we have multiple counts, so that in itself will say that a particular pattern is going on. But when a particular pattern has ended, it needs to have a specific outcome. If that outcome is not there, my labeling, my wave analysis, my pattern is wrong. Nothing wrong with the market. Then Fibonacci, we will go for Fibonacci analysis beyond beginners, not from price top to price bottom. We will go to that. Then risk management, multiple tools, how we are going to put neo wave theory and Fibonacci theory into it. Then neo wave theory. Why neo wave theory? Just I started from this very thing. Like all things in nature, wave theories also grow. So this is just the expansion. The earlier Elliott wave theory, that was a comprehensive in itself, but the market with its own development, with its own evolution, started to put some very specific patterns over the last, say from 1990s to 2010s. They started showing some different patterns which were not explained in the early Elliott theory. So it was thanks to Mr. Sir Glenn Neely, who found out those specific patterns. Just to name those, he found out neutral triangles, which was not in earlier Elliott theory. He found out diametrics. He found out symmetrical patterns, which were not in Elliott theory. We will discuss one by one. Then how to move away from emotions and take objective decision making, how the markets are self-defining and self-confirming. Then market judges our analysis, how they behave after pattern falls, finishes. Then able to predict every market phase, whether it is trending, whether it is non-trending, or it is counter-trending. Everything is explained in the uh, neo wave theory itself. Then risk management, how to enter at or around the extremes. Much better perspective of what is going on. Then most important thing about neo wave, why as a trader you have to have in your toolkit the perspective of neo wave. It's a complete perspective and does not need any outside support. Believe me, trust me, neo wave theory in itself is complete in itself and you don't need any other support outside. Obviously, for risk management or for very short term or different trades, you might need some other inputs because it is a war at the end of the day and we need to win with try to win with all the confluences of multiple things. But as a theory in itself, it proves everything. It doesn't need any support, no indicators, no support resistances, nothing else. It is complete in itself. Then high clarity at the end of a move. It's very, very, very important. It is where fundamental analysis is not able to catch up with it. Fundamental analysis is primarily good at the start of the trend, somewhere in the middle of the trend, but it is not good at the end of the trend. And this theory, neo wave theory, has the perfect edge. Rather, it is one of the fastest ways to define when a particular pattern has ended. We will go to the charts, live charts of Nifty. We will come to know how these things are decided. We will come one by one into stages. Then there are some advanced logical rules. Basically, I will come again on defining these advanced logical rules. These are nothing but basically what the trend is, what the pattern is, what post pattern conclusions are, what the market should and should not do if our analysis is right. These are all the very things, nitty gritties we will take in detail. These are also advanced logic rules. Once I come clarify other things, I will come back to it. Uh, just at a point of time because what it is basically all these advanced logic rules are developed by neo wave theory, and this is the demarcating factor which puts it in a very very objective, in a very very, you can say, a sure shot manner what can happen and what cannot happen, how we are to trade. Because generally if we follow, I personally also experienced several times when we follow Elliott wave theory, there are so many multiple counts and you are confused, and by the time you have to take your position you are nowhere, the market has already moved on, so there is no fun of labeling. Why my job is not to properly label the count now, my job is to earn money out of the markets, and that is to be with the trend. And the objectivity, the clarity, and the you can say the advanced signals of new wave theory, they make the living much more easier. They make the living decision making much more easier. Simply what I want to say is whether I am able to depict what the wave count is or not, whether I am able to be a good you can say analyst in defining the waves or not, does not matter, because this theory is so very objective. This gives me a complete, a holistic approach of what the mass psychology is. I might be wrong in labeling account, but I'm not going to earn from labeling. I'm going to earn from participating in the market, and the holistic approach, the broader approach, which specifies what can happen, what cannot happen, the feel, the look and feel of the chart, and taking from the look and feel of the chart to the rule of similarity and balance. Similarity and balance between price, time, complexity of various patterns. We will go one by one on each of it. Now, basically, what it is, basically on whether it is Elliott wave or Neo wave, we can divide all of these into two parts. What these parts are? These parts are either impulse or corrective. So when we call impulse patterns or impulsive patterns, impulsive means they have a trending, they are trendy, they trend either up or down. One thing. And secondly, they are composed of five waves. They are labeled five. Their structure is five. One, two, three, four, five. They are labeled like this. There can never be four waves or six waves in an impulsive pattern. Impulse pattern can only be one, two, three, four, five. That's it. And that too, either trending up or trending down. They cannot be sideways. And anything and everything apart from impulses is corrective.